This video has been a long time coming. I got a professional investor to come on the show and tell us what he thinks of all these ridiculous fake gurus. I wanted to know, do these professional investors, people who run hedge funds, people who are institutional investors, do they actually respect people like Ricky Gutierrez, Tim Sykes? Are these actual traders that you should listen to, or are they just frauds? So you're going to hear it straight from an actual professional investor. Forget about these 20-year-olds on their little laptops telling you that it's so easy. Just spend an hour with us. Come on. You know, I know you guys like to see the Lambos. We don't have any of that for you. I know you guys want to see the nice houses. We don't have any of that for you. What we do have is somebody who has spent his life in the stock market, and he's going to tell you that not everything you've been told is gold. So please enjoy this hour-long video, and I'll see you in the next one. Welcome to Coffeezilla. Today, guys, we have Patrick Boyle. Patrick, you've been an institutional investor for over 20 years. You teach at university in the UK, and you're now a hedge fund manager. Is that correct?
Yes, that's correct. Yeah.
And on top of that, you have a finance YouTube channel, which is criminally undersubscribed to, because you talk about, a bunch of interesting real finance topics, not how to make $500 in a day. You're actually trying to educate people on how to trade, with a quantitative approach. And you reached out because you said, look, we're talking about something I had said about day trading, but I said, hey, why don't you come on the show and talk to people? Because obviously you understand trading at a higher level than probably 99% of any of these YouTubers or coaches or anything like that. And so I'd like to talk to you about reasonable expectations for people who are getting in the stock market, reasonable expectations for how to know if somebody's selling you something rather than actually giving you a real education. And we'll go from there, but let's just start off. As someone who's been on the institutional side, now you're on the hedge fund side, you teach this stuff at a university level. What do you think the state of education is with trading on YouTube right now?
It's interesting because there are some good channels out there that I quite enjoy, like that kind of just give a good explanation of sort of what various products are. I think, there's a fairly obvious differentiation between the people who are telling you how to get rich and the people explaining things to you. And I would argue, in a funny way, I think that, the sort of fake guru thing is not just an investment world or a money-making thing. It's there everywhere, like in that, and some of it relates, as you said, reasonable expectations. Like if you'll see someone telling you, how to lose 50 pounds in 2 weeks and have a, six-pack abs, or how to learn the guitar in one easy lesson. And, all of these things, like you have to sort of ask yourself, is it reasonable? Like these, is it reasonable to think that someone could very quickly, within a few weeks, tell me how to do this sort of thing?
Yeah. And I think, though, the problem with stocks is that with weight loss, it's pretty easy for most people to understand why that's unrealistic. The stock market's much more complicated, and most people who have no experience with the stock market might very well be taken in by the idea that, like, oh yeah, it's reasonable to expect I'm making 2% a day, and that's like a reasonable rate of return. Can you talk about what should people be expecting for day trading? What is an excellent return, and what's just like that doesn't happen? When does it become?
Well, let's actually start just with that 2% a day argument, because that's kind of a slightly comical one, If you think about it, it might sound reasonable to someone initially. Like if you say, well, if you took something and bought it for $100 and sold it for $102, that sounds within the range of reasonable expectations. But if we then kind of annualize it out, if you take 2% a day, that would turn into about, I don't know, 140,000% a year, roughly. Like that's what you're talking about. And in 3 years, you could take your $100, and that would make you probably about 16 times wealthier than Jeff Bezos, for example. It would make you, if you were 16 times wealthier than Jeff Bezos, you actually would be probably wealthier than the 100 wealthiest people in the world combined, right? And so 2% a day, you know, when you kind of go, oh, well, I bought something for 100 and sold it at 102. Now I'll do that every day. That's not how the world works, you know. A good example, like when I looked up like some of the returns of the greatest investors of all time. So people like George Soros and Warren Buffett have probably the best records out there. And, you know, a lot of people kind of go, oh, Buffett, it's boring, or at least the sort of fake gurus would. But Warren Buffett and George Soros have each returned about 20% a year over 40 years, you know, which is about twice the return of the market, you know. So that's amazing returns to have gotten away with. Steve Cohen of SAC Capital returned around 30% a year over a much shorter time frame. And it's worth noting that he has been banned from trading client money by the SEC. And, you know, there are, I don't know that anything is proven, but there have been questions around his trading.
That's certainly worth noting. Let me say, though, so what these people will say to this when I say this, or when you say this, they go, hey, well, that's because you're talking about people handling very large accounts, and my genius strategy that's making me 2% a day consistently just doesn't work on that scale. And that's why I'm only making, like, let's say they make $100,000, $500,000 a year. They go, so this is like a Tim Sykes thing. I can really take people from trading with like nothing to trading about a 1 million to 2 million account size. But after that, my strategies don't work, which is why I'm not a Warren Buffett. That's what they'll say. What would you say to that?
There is something there in that even the fund Palomar that I ran, you know, we capped the amount of investor money we would take in because we're doing short-term strategies, and that means they're less scalable. But the nature of something being less scalable also makes it less shareable, right? Because why would you take something, if he's able to turn, we'll say, $1,000 into $1 million in a year and then continually trade that, why would he ever give that to the public? And it's not like you ran into him and he's a friend of yours and he offered to help you out with this advice, right? Like when you search, if you just Google like great trading strategies, like the first 10 ads will be from these guys, right? Like, so not only are they, you know, not only are they willing to give it away, but they're willing to spend money on ads to tell you that they'll give it away to you.
So in other words, if it's a strategy that is limited in scale, that doesn't make any sense because they're paying good money to scale it to the moon.
Yes.
Okay.
Well, not only that, it's actually even an interesting thing is because what I run is sort of quantitative strategies. And what that essentially means is that I take a lot of data and I analyze them and look for opportunities within the market that you know, in theory work repeatedly. Now what you actually find them when you do that is you find a mix of strategies that work quite well, and you find other ones that look like they will work quite well, but then they don't out of sample. And it's always difficult to differentiate between those before, you know, on day one. But the nature of those kinds of strategies, as I've said, they're usually not scalable. And so you keep them as a secret, you know, and you keep them as a secret, not even out of a lack of generosity, but it's a lot of work for me to find a good trading strategy. And if I worked in offices with great people and they've sort of said to me like, oh, could you explain how this works? And it's like, I can't tell you that because then everyone will do it and then it won't work, you know, because that's the nature of some, you know, actually the first guy I worked with, the first kind of really interesting fund manager was a guy named Victor Niederhofer who wrote a great book called Education of a Speculator. And in the opening of the book, he basically says, there will be no trading secrets in here, because if I could tell you this sort of thing, why would I tell you that and put myself at a disadvantage and return myself to being a mere mortal, you know, struggling to feed himself, you know? And so, you know, and actually an interesting one, because when I did start that job, I was around 20 years old. And I remember kind of arriving in the office with a guy who I knew had, you know, he had run Soros's Quantum Fund throughout the 1980s, you know, under periods of huge returns. And I kind of thought, you know, like, this is great. I'll sit here and he will teach me his ways, you know. And instead, he sat me there and he said, "There's a computer. There's a load of data. Go and find a good trade." Because he didn't hire me to teach me stuff. He hired me to find stuff that he could find useful. And that's kind of the nature of any of this stuff. Like when people look at my YouTube channel, I often try to explain unusual technical things in the market. Like one of my bigger videos was a while ago when oil prices had gone negative. It was all over the newspaper that oil prices were negative. And what I tried to explain in the video was how sort of the nature of the futures market means that when you're buying and selling oil futures, you're not really buying oil that's in the ground. You're buying oil that expires at a certain time. And so therefore the price relates to storage costs and all these other things. And you know, I put up this video and it did well, but a funny thing is a lot of the people in the comment section then wanted me to say, well, should I buy oil or not? And it's like, no, I'm not telling you what to do, because if I tell you to buy something, you then have to come back to me and be told when to sell it, right? Like I'm explaining how it works. And once you arm yourself with all of these ideas, you're better able to make decisions, you know, once you understand the products you're trading better. And that's kind of my goal with my channel.
Right. No, and I think that's the nature of real education, is not like, okay, tell me what to do. Now I'm going to do it. And I'm going to come back to you. And now you tell me what to do again. And I'm going to do it. And then I'm going to do it again. And I think a lot of these things end up sort of also being a bit of pyramid schemes, where these people, they give signals to their audience who then rushes out and buys the thing, and they sell it on the way up. Like the person.
That's sort of the oldest scheme in the world. You know, you read, you know, one of the things I would advise people if they want to learn about investing and trading is to read a lot of books. And there's books going back hundreds of years on the idea of financial speculation or investing or whatever it might be. And these tricks are all as old as the hills, you know, and these guys have been around forever.
It's just kind of a new coat of paint is what you're saying. It's just
exactly it's just, you know, there's nothing necessarily that new about their claims, but you know, the pump and dump scheme is basically what you're describing there. And you know, it's a thing that's been around forever. You know, the internet gives it new life because you're able to reach more people over the internet than you're able to reach. But interestingly enough, one of the things we first started chatting about was Jordan Belfort, the Wolf of Wall Street, you know, who is now, I guess, setting himself up as an investing guru of some sort.
Yeah, he's joined ragingbull.com, for those of you who don't know, which is under ownership by this guy, Jeff Bishop, I believe, or... Here, let me look it up real quick. Raging Bull. Well, and I know...
Interestingly enough, you know, I see the ads once again all over YouTube. The funny thing is, if you create financial content, you get financial ads, and they tend to all be sort of questionable ads, I would say. And, you know, Jeff Bishop is one of these guys, you know, kind of getting on an airplane with wads of cash, you know, like for some reason, like when I invest in the market and I make a profit, it usually turns up in my account, while their brokers seem to drop off these large bags of cash that they then have to take on a private jet, you know, to an island where presumably they bury it or something. But, Jeff Bishop, you know, there's two guys, Jeff Bishop and Jason Bond, who seem to head up Raging Bull. Now, in the ad that I most often see, Jeff Bishop says he's the founder of Raging Bull. And I remember thinking, like, Raging Bull's been around for a while, you know, and so the internet exists. You can look up who founded Raging Bull. It's founded in 1998 by three college roommates. None of them were Jeff Bishop. So
that's so
and
funny.
actually, I think you could even find his LinkedIn CV, and it's not obvious to me that he ever worked in any sort of investing role other than sort of pitching stocks on Raging Bull. So,
oh my gosh, that's so funny! I did not know that. But now to bring us back to Belfort, now Jordan Belfort is being pitched as some stock guy. And you made some hilarious observation that maybe you should just like repeat here, because I find it hilarious, because he is a salesman. I will give him, he's a good salesman. And that's what he was teaching for some time. And I was like, okay, at least you're obviously a good salesman. That's fine. I don't really have that big of a problem with it. But now that he's selling stocks, it's like you were arrested for what you did with stocks.
He received a 4-year sentence for securities fraud and money laundering, I believe, just to be clear. So I kind of think that if he was setting up, teaching you how to maybe sell a pencil on Amazon, that might be. I've seen the Wolf of Wall Street film, and he seemed to be an excellent pencil salesman, but it's just not obvious. Maybe the only thing he's maybe less suited to, having watched that film, is maybe teaching someone Lamborghini maintenance tips. That's the only thing I would say. I mean, this is a guy, in fact, amusingly as well, on his Wikipedia page, where you can see I get all of my information, it says that his greatest regret, he claims, is losing people's money, And he didn't lose people's money. He stole people's money. There's a difference. He didn't lose it. They lost it.
Right. Yeah. He stole it and then spent it.
He stole, I believe, or at least he was required to return to his clients 110 million. Apparently, 10 was paid back, and that was through asset forfeiture and so on, which means, the way these guys talk about how much money they've made or how wealthy they are, Jordan Belfort, it would appear to me possibly as a net worth of minus $100 million, So
that's who you're finding. Yeah. I believe I forget what the product line is called, but they're pitching it as free, but it requires a membership. So it's like, okay.
Yeah. Well, and another thing I'd recommend to people who might be interested in signing up for these kinds of courses is, if you look on websites like the Better Business Bureau, you can see how well people have done. We'll say if they subscribe to a service and try and cancel, whether they get their money back and so on. And, you can find Raging Bull has a score on the Better Business Bureau website if anyone's interested in looking that up.
What is the score?
It's not 5 stars.
Okay, that's a very nice way to put it. Oh, it's 1 and like a third stars out of 5.
Well, you've got to imagine that
so
some
bad.
people
Better Business Bureau rating of F. Yeah, and they're not even like the Better Business Bureau. It's not even, a lot of people can get A's even being fraudulent. So the fact you have an F, anytime I see an F on the Better Business Bureau, I think, wow, you must be really doing something wrong.
Well, it means you haven't upset some of your clients. It means you've upset most of them,
That's right. So actually I have a question. So let's say somebody, because I feel like this is a great opportunity. Let's say somebody wants to get into investing. First of all, specifically day trading, because I made a video that made a lot of people mad where I said day trading, you'll probably lose money. I cited a couple studies that have looked at a bunch of day traders and what their returns were. Yeah. And as you know, even the day traders who do well 1 year, or even 2 years, typically it's only a minor indication of how well they'll do the next year and the year after that and whatever. So I basically said, look, you're better off probably, unless you're going to spend your life doing this, you're better off just investing in the market. Would you agree with that? And then if somebody wants to day trade, what are reasonable expectations? Like if they actually want to learn how to do it, what are the books maybe to look into? And then also, we're talking returns here. There's some people who think they're going to make $100,000 a year day trading pretty quickly. What do you think about that? Okay,
so there's a few things like, because, I teach finance at a university, and a lot of the students ask me about starting up trading, and to a certain extent, I slightly say to my students, it's a good idea to have a brokerage account and to invest some money, because even just if you go to a job interview, if you're, often you'll have someone in a job interview and they'll say, my passion is investing in stocks. And you kind of go, what stocks do you own? And they go, well, I don't own any. And it's like, well, it's not exactly your passion, and that's all right. Things don't have to be your passion. But, I do say to them, it doesn't hurt to have an investment account, but that's different to day trading. I usually advise them, if they want to sort of start this sort of thing up, is just get an Excel spreadsheet and put in the trades that you would do and see how they work out. And that gives you a bit of a feeling. And there's some people and they kind of can't play with pretend money and act like it's real money. And there are others who really can. And if you are the kind who can, you'll possibly learn quite a bit about yourself and about risk tolerance and things like that. I think that's a good approach to start. In truth, I think for the majority of people, day trading doesn't make sense. And it's basically based, I did see the video you're talking about, and I think it's entirely accurate. And it's not me being negative, but, the reason, I do a lot of short-term trading, but I have very good relationships with brokers and that kind of thing where I trade very cheaply. And it's not like, some of the trading apps tell you they don't charge you a commission, but, people make money one way or another. And if they don't charge you a commission, but route your trades to, a high frequency trader, they've been well compensated for this, So
can you break that down a little bit for people? Because they're thinking, okay, no, it's a no commission. How can I?
Once again, there's kind of the basic rule of economics. There's no such thing as a free lunch. What essentially, firstly, a lot of these brokerage firms they're not making the money they used to because they've brought their commissions close to zero. But high frequency trading firms will pay them to send those trades into the pool. In fact, the guy who invented this thing of paying for flow was Bernie Madoff, interestingly enough. But he had another business besides Ponzi schemes. But and interestingly, when I was at university, we did a case study on whether Bernie Madoff was a fraud, but it wasn't whether he was a fraud, whether his business was ethical, because it was about rerouting trades like this. We deemed it not ethical. We just didn't know how unethical it was.
This is before.
Yeah.
That's so funny.
Around 2004. There's a business school case study out there you can find, in terms of why the problem with day trading is, we'll say, for example, if you start out, like even if you have a good amount of money, you've got $1 million and you want to invest that in day trade, a good year might give you sort of a 10, maybe 20% return, which is 1 to 200,000 a year, and that's great. But there are also months and days and years when you will have horrible returns, and that's just the way it is. And look at the greatest investors out there and their returns, and you'll see that there are, even multi-year periods of terrible returns. And you have to sort of still put food on the table throughout those difficult periods, and you have to stick with it through those periods if that's reasonable. And so that's if you start out with, we'll say, $1 million. Most of the people who are talking about doing this are talking about starting out with a lot less money. And the problem is, if you start out with 10,000 and want to make 10,000 a year, you have to double your money.
They want to make 10,000 a month. Are you kidding?
Well, that won't happen, because it's kind of like saying, go to Vegas and you can make 10,000 in a month. And it's like, if you're lucky, but the long run expectation is that you will lose all of it, and that's another problem I have with a lot of the sort of fake gurus, is that, I watched a video, I think Jeff Bishop video on options the other day, and I have a bit of expertise. I've written a book on pricing derivatives and that sort of thing. And his video was firstly filled with errors, to be clear. But then on top of that, he was saying that the beauty of investing using options is that you can 10 times lever your money. So instead of, if the market moves up 10%, you'll double your money, and that's great. And it's like, he doesn't mention, or he kind of glosses over, that if it moves against you at all, that you will materially
lose everything.
Yeah, and that this is expected to happen. Like this, and not only that, then he also advocates the most volatile stocks. Like when he says you could trade, and he lists out 5 stocks, and they're all like the most volatile things. And not only have you found the craziest thing, but then you're levering it 10 times. He made these other errors where he said that when you buy an option, that it's made up of intrinsic value and time value, and the time value is the amount that you can lose. And it's like, no, when you sign up to trade options, you sign a disclosure disclosure that states that you can lose more than you invest, and that is the truth. That's what you can lose, is more than the initial capital. But on to like whether people should day trade or not. I think it's reasonable for people to learn about finance and to invest. I think it's reasonable to start out small, not 10 times levered. And I also think that the other thing you have to look at is sort of your lost earnings from other things, because when these guys are sort of sitting on a beach with a laptop claiming to make 2% a day, I don't leave the office. I haven't had a holiday in probably 8 years since I've had a holiday. Okay.
Yeah, but Patrick, respectfully, that's because you actually do this for a living.
Well,
these people don't. These people don't actually do it. They just sell it. And so part of their job is to show up on the beach with a photograph, with a photographer. And that's their job, is to sell the lifestyle of this so-called mysterious day. But you're out here saying, look, if you actually want to do this for real, you're not taking a day off.
It's hard and grueling work. It is emotionally stressful, because whenever things go well, you feel like a genius. And when things go badly, you feel like the world's greatest idiot and a fraud. You look at yourself and you're like, why did I just, I could have done other things with my life, And that was actually a point I was getting to, is that, for a lot of people, if you want to talk about like, I remember in the late 90s, there was a friend of mine who, her husband, shut down his dental practice to become a day trader because he could make more money trading stocks than he could working as a dentist. But you have to look at the income you've given up by doing this as well. Like if you quit your job to be a day trader, the problem is, you have to make the amount of money that you need to feed yourself, for one thing, which might not be easy. And secondly, you don't have like any steady income coming in. So there's opportunity cost. Also, your CV isn't, if you're young, because I feel a lot of this stuff is pitched at quite young people. And it's all on Instagram and things like that, where, no one over the age of 30 has ever logged in, And, the thing is that it's misleading as to, you don't just lose some of your savings. You can also sort of harm your career. And it's a funny one. When I launched my fund, I had worked in the investment management business for probably around 15 years at that point. And I was slow to launch my business because I'd seen so many people, like good, smart people that I knew, start up, and then it just doesn't go very well. And they spend 5 years kind of breaking even or making a little bit of money, but never enough. And they're kind of never able to go back to doing a real job again, because there's always this hope that it's going to work, And I really waited until, firstly, I was able to start with a reasonable amount of capital, but secondly, even that I had sort of, I had 15 years of trading experience, including through the financial crisis and sort of stressful situations before, because, someone who's honest with themselves also asks, are my returns random? And it's not always, obvious. We'll say, for example, even, when I brought up that Soros and Buffett have amongst the best records out there, the truth is there's a lot of people trading stocks, right? There'll always be two people like if it was a coin flipping contest, there would always be two people
with weird records that are way outliers, that they're just always seeming to win.
It's just the nature of randomness. And a funny thing, because I worked for Vic Niederhofer and he met occasionally George Soros, and Soros was stressed about this. He would never put himself forth as someone with genius ideas. Victor used to say that at the end of the year, Soros would be dejected and say, I'm out of ideas. I don't know what to do. And Victor would say, well, you've just had 100% return last year. This is, you're the greatest trader in the world. And Soros would go, yeah, but that was then. I don't know that I have that anymore. And that's how a real person thinks. These guys don't, one of the things I would say, if you want to try and differentiate between a fake guru and someone who's really knowledgeable, is just look at how they behave, because they behave quite differently. Like if you look at how, look at the sort of Forbes wealthiest people in the world and how they behave, and then look at how these guys are like sort of flashing their Lamborghinis and, a bookshelf in the garage, because that's where you keep books. And, like this is not how normal people behave. And I think they've kind of triggered in all of these like little psychological reactions. Like they've worked out how to make you jealous, and they've worked out, and Instagram, I think, is just an amazing jealousy machine, And
it's true. Its main function is just to make people constantly jealous of each other.
Exactly. And these guys they show you all of this kind of crazy kind of lifestyles of the rich and famous, or MTV Cribs lifestyle, and tell you a year ago I was just like you. And it's not really believable, but gosh, people like to dream, like I understand why people sort of fall for it,
Yeah, absolutely. And one thing I'd also like to say is one way you can differentiate. I mean, this is my humble opinion, and you should tell me if you agree or disagree, is I feel like people who understand what they're doing don't dumb it down and make it seem easier than it is. Trading is extraordinarily difficult if you want to achieve a outsized alpha, repeatedly. Yeah. And so I think that what people, when I see your videos, I'm not seeing how to make all this money so quick. It's like sort of like fundamental principles of this, statistics, all these kind of basic techniques. And those are the basics. I mean, that's just even to get your feet wet in the field. But if you actually want to do real work, you have to understand it to an even more technical level. I think so. What do you think when you see all these people doing so much technical analysis and just like constantly trading just candlesticks and stuff like that? What do you think of that?
Well, a funny thing is that, as I told you, when I started that first job, and I sort of expected to be told all these trading strategies, and people said to me, no, go and find your own trading strategies. So step one was to go to a bookshelf and to take down all of these technical analysis books. And so I sat there and methodically tested them. And in particular, actually, candlesticks, they're the easiest to test because it's just open, high, low, close data, right? And so there's often just 3 candlesticks in there, right? So you can take that sort of pattern and run it through all the stock market data that you want to and see if it works or not. And amazingly, like I was almost surprised how, because even according to randomness, you'd expect like some of it to work better, but there were very few things that had any sort of a Sharpe ratio at all. And many of them that were sort of supposed to be bullish signals were bearish signals and so on. And
so it's actually giving you the opposite. It's like actually doing worse than you might expect from just even randomness.
Exactly. And, the problem, like one of the problems with being a day trader with short-term trading is that firstly, you're running up a lot of trading costs. It's expensive to trade. Even on top of like, not only do you have these high trading costs, but you also then have, it's all short-term gains, right? Which is taxed at a terrible rate. And, the investments that
No one ever tells you that. No one ever tells you that.
No, and in truth, I don't even think it's reasonable. Like, I don't know why a short-term gain is worse than the long-term gain, but that's the tax code, and it's the tax code in most countries. Now, the kind of people, because what I do is short-term trading, there's certain tax advantages in futures, but not only that, the kind of people who invest with me are usually people who have non-taxable accounts. So there are certain strategies that might make sense in a retirement account that don't make sense in your regular account. And, these are all subtleties, like, Jason Bond or whoever isn't going to tell you this stuff, but this, an interesting one, like even when I was at university, one of the first studies I did was to look at the behavior of stock prices around their dividend dates, right? And the idea was that a stock that pays a dividend, if it pays a $1 dividend, you'd expect it to fall by $1 in value, right? And the problem is that the dividend is taxed at one rate. And so you would think that maybe there might be an arbitrage in there, that you could buy dividend paying stocks, we'll say in your retirement account, and that you could buy non-dividend paying. In fact, I think it's a great idea still that you could split your retirement account, have the dividend payers, and your regular account have the non-dividend payers, and then you're tax efficient, but that's a smart kind of quantitative trade. There's no investing guru telling you to do things like that.
Right. That's like this subtlety with the tax code where you can kind of cheat out a little bit of extra income. And no. Well, Ricky Gutierrez isn't going to tell you this.
And actually, that's the problem, is that almost any good trading strategy often involves detailed knowledge. Like, it involves knowing all of the rules of the markets, how they open, how they close, like why people do certain things. Like, there might be certain trading strategies that would be driven by, we'll say, for example, I did a video a little while ago on index adds and deletes, relating to Tesla possibly getting added to the S&P. And there are all kinds of ideas you can come to based around little technical things like that. But that's more work than sort of, in fact, there's one guy, I wish I knew his name, he has the worst possible video. He's one of the bag of money guys, and he has these videos where it shows stock price going up and stock price going down. He's like, what I'll teach you is how to buy when it's going up and sell when it's going down. Other people do the opposite. And it's it's amazing that he's worked out this trick,
It's like a magic trick. I know. Yeah. It's I feel like these people are like magicians trying to convince you that magic is real, when really they kind of have a con going on behind the scenes, and they're basically just fooling their audience. And then the people sort of in the know are like, do not fall for these guys. They're selling you a lie. So, okay, because absolutely things aren't black and white, but let's say somebody's sitting out there, they have an account size of less than $100,000. And they're saying, Patrick, I see that you've got experience. I see that you teach university. Yes or no, should I try day trading, or should I just forget about it as a primary income?
I think it would be a horrible mistake, because your expected return off of that is zero, right? Because it will say if you're exposed to randomness, your expected return is zero. And that's just mathematically, right? We'll say if you happen to have an edge, you might, then look at all the good hedge funds out there and their returns, 20% a year for Buffett and Soros, right? So if you're as good as Buffett and Soros, which chances are you're maybe not, your return is $20,000 a year. You need to get a job. Do you know what I mean? Because you'll earn more. If you're the kind of person who's able to save up $100,000, you're probably a high enough earner that earning $20,000 a year, and also then it gets taxed as short-term gains, so the government takes half of it away from. Well, you'll be in a lower tax bracket, but being in a lower tax bracket is its own problem.
Yeah, right. Having not enough income is definitely its own. It's its own unique set of challenges. I'm glad you said that. Get a job. That's what I always say. All these people are trying to. They really dismiss jobs. They're like, yeah, you shouldn't be a guy with a job. They hate jobs. It's the weirdest thing ever.
It is a sort of a disgusting thing, the revolt they have for people who do real things,
real work.
There's one of the ads, and it kicks in with I remember the day my boss told me he was giving me a 5% pay cut, and I told him to stuff it. So, sort of starts out like that, but it's all, there's such a scorn. It's kind of look at me and my Lamborghini. I have such scorn for someone who works hard to put, food on the table of his family,
It's just terrible. It's terrible. Yeah. And then they go, yeah, this is realistic. Come sign up for my stupid course, which is the reason he owns the Lamborghini and the only way he can pay for it. And then you go sign up, you get less than expected returns.
And once again, when I say like, look at how these people behave and how actually wealthy people behave, like I've been fortunate in my career. I've met a lot of some of the wealthier people around, and I've never heard them be dismissive of a person's work, because it's work that work generates wealth. Like it's really like if you can do something that helps someone, that makes their life better, they will pay you for that. And even that's my business. Like I invest money for people, and I do a type of analysis that is frankly grueling and unpleasant to do. And I trade it, and people will pay me to do that. But like, if you're not sort of doing stuff that makes the world, but my old boss, once again, Vic Niederhofer, had these T-shirts printed up that said "add value" on them, and he felt that was the route to all success in life. Is if you are adding value. It's even like if you have a YouTube channel, if you have a channel that some people can watch and get some value out of it, then it's worthwhile. If it's only for you, it's maybe less, it's not going to grow, and it's also not necessarily it's not worth your time, maybe.
Yeah, and that's a lot of what these people are doing is they're trying to teach like shortcuts to getting more wealth than you actually even are like you're not actually doing anything, so why do you expect to create this wealth? So there's kind of a mismatch of you're expecting to turn $100 into 100,000, but you know nothing about the stock market prior to this guy's course, and it's like he's supposed to take you there. Come on, get real.
Well, it's even the kind of these people telling you can make a fortune like buying stuff and selling it on Amazon, and it's like, the most famous quote of Jeff Bezos is your margin is my profit opportunity, or he's got some line like that, wherein everyone is terrified that Amazon will enter the business they're in because they grind the margins to zero.
Drive it down to zero. Yeah,
and for some reason people think that Jeff Bezos has left all of this fat for them to eat. And even
it's just no. Hold on. That is the craziest thing. I always tell people this. I'm like, you think Amazon FBA is the greatest opportunity? You're talking about the most ruthless businessman probably the 21st century has ever seen, and you're saying that guy is going to make you like millions and millions of dollars without basically grinding your bones and sucking as much blood as he can out of you? You've got to be kidding.
It's insane. And not only that, there's kind of this idea, like, I think what they often do as well is they rename a business something else. Like you had the term they used there for like Amazon something,
FBA.
Amazon,
yeah, it's just drop shipping.
They call it that because what it is opening a shop on the internet. Like if you're buying stuff, we'll say cheaply from a manufacturer and selling it to someone else, that's a shop. That's called a shop. You're now competing with Walmart and Target, but they have actual shops. You don't even have your own website. You're using Jeff Bezos's website, and you're going to get rich.
Yeah, I mean, it's absolutely hilarious. So for people who are like, okay, well, how can I make the stock market work for me? Because obviously how these people get away with doing this is because everyone knows the stock market itself is not a scam. There are ways to make people make fortunes on the stock market. They just don't make it overnight. Yeah. So I usually recommend that people do things like index funds, just really safe, super low fee strategies, things where you can get 95% of the value, let's say, out of the stock market with basically doing no work at all. That's how I usually advise. How do you, when you look at things, people, average, everyday people who are just like, how do I get the most out of this without basically subjecting myself to extraordinary risk or extraordinary amounts of time that may not pay off for me? Let's just say they don't want to be a professional investor. What do you do with your money? What are your recommendations?
I would advise people firstly to put money away and don't even look at it. Like, so when you invest it, don't even look at it. Like if it's for your retirement, if it's in 30 years time, start looking at it in about 25 years, but just put it, as you say, in a low cost mutual fund, like place like Vanguard or Fidelity. They all provide them, right?
Yeah.
If you want to mix it up and sort of use your head a little bit more, like if the purely passive approach doesn't appeal to you, all of those big index fund services provide a bunch of indexes, right? And you can probably improve your diversification by maybe adding like opportunely, like you maybe sometimes, in recent years, growth stocks, all the technology stuff has done really well. In other periods, value stocks, like kind of the more boring companies, do well. You might want to, if you feel that you can add value, you might allocate a little bit differently between those rather than just a pure index fund. You might want to, buy an international mutual fund or emerging markets or something like that if you feel there's been a big sell-off in that area, if it makes sense. But that's kind of as active. The stock market is a great thing, and it really is the route to wealth. Well, it can be the route to growing your wealth in that when you invest in stocks, what you do is you own a business or you own part of a business, and you should expect the kind of returns that a business will get. So if you're invested in Amazon, you should expect the kind of returns that Amazon will get or whatever. And so, sorry.
No problem.
So, investing in stocks is a good way of growing your wealth. I think everyone should invest, just to be clear. But I think that you need to do it with an amount of money that doesn't stress you. Like if you are staring at the daily moves, it probably means that you've exposed yourself to too much risk, if you're afraid of it, and just back your size down. There's a friend of mine who is a big fund manager, and he refers to the stock market as being a lot like a casino, but he says you have the great fortune of being on the correct side of the tables, because over the long run, the stock market grows, we'll say, at about 5% greater than the risk-free rate or than what you'd earn in bonds, right? And you get to put your money in and be like the house and sort of have the edge in your favor. But then what you do is you just put it in and you leave it in. And often, we all have these faults. We all have urges to do things differently, and they often harm us in the world of investing. And a great example, actually, the same guy, I'll send you a link later. He wrote a paper on a coin flipping game. And it was set up that the students who did it were told that the coins would flip, I think, 60% of the time you'd have a heads, right? And you get to bet on it. And he wanted to see how well people bet on this.
Is this a Malkiel argument? Or is this Burton Malkiel?
No, this is his name. He's actually one of the partners from Long-Term Capital Management, Victor Hagani.
Okay.
And another friend of mine, Ewan Kirk, wrote a really good kind of follow-up paper on it. But you've got a coin flipping contest. You've been told that you have a 60% chance of winning if you bet on heads every time. And he really wanted to see whether people sized accurately, because if you bet too much of your bankroll on that, you will still go bankrupt. There's actually kind of a formula, the Kelly formula, for correctly sizing your bets. That is a kind of quant trader idea or a gambling idea. But so he wanted to see how close to like the Kelly optimal bet regular people came to. And he was shocked because he found that a lot of the time there were people, and after a long run of heads, they would bet on tails because they just felt it's time for tails to come up, And there's sort of a thing where we want to express ourselves, like, or prove our abilities. And often that's harmful, like when you've been told the winning strategy, a lot of people can't stick with the winning strategy.
They go with the losing strategy because they go, I just want to be different, or I want to be.
Yeah.
Maybe they think it's time for tails. It's time
for a change, yeah. And they sort of feel that will prove that the return is about them rather than that it's sort of a return that they're harvesting. And in the real world, like even all of my quant trading, it's about harvesting returns. Like I find a return stream. It's a risky return stream always, by the way. There's no such thing as a risk-free high returns. I find these return streams and I try and harvest them, and then I try and find more of them. And basically, like when someone invests in something like a hedge fund, firstly, you shouldn't really usually invest in a hedge fund unless you've got tons of money that's already in the stock market. And then you kind of say, what could smooth out my returns? And the way I would tell an investor what you get from a hedge fund is actually uncorrelated returns, where you get access to a return stream that's not easily available. that isn't tied necessarily to the return of the S&P 500, but it's not a better return stream. It's not a risk-free return stream. It's different. And by being different, it's sort of, if you look at the sort of correlation mathematics, it should overall give you a better risk-return trade-off. But
because you're trying to basically diversify out your risk.
Exactly. It just gives you diversification. So even things like private equity and hedge funds, you might get a better return out of them, but what you should be aiming to get out of them is diversification from the easily available good returns that are available with a stock market investment.
I would expect that to go over a lot of people who barely understand the stock market. I expect some of that to go over people's heads, but those of you at home, if you understood that, that is a amazing kind of nugget of wisdom there. Because what people are looking for a lot of the times is some uncorrelated market. And it's so hard to get an uncorrelated rate of return a lot of times nowadays because markets are so highly correlated. Something that happens in America oftentimes will affect markets in China and stuff. And so people are constantly, if you're really in the market, you're looking for some sort of thing to diversify your risk away. And so that's really interesting. I personally did not know that. I've often wondered what is the like real draw to hedge funds. So that's something for me to take away.
If people are super interested in this, I have a playlist that's put up. I think it's called Applied Portfolio Management, and no one watches it on YouTube because it's about 6 1-hour videos.
Because people don't actually want to learn the stock market. No. They just want to. They just want the hype of like, I'm a trader. They want to say, I'm a trader. They want to say, I day trade. They want to say, I've got Forex life. They want to talk about the lifestyle. But nobody actually cares to understand anything. Nobody actually cares to actually go and research and do the work to understand what they so-called are investing in or are talking about.
Well, even like two of those 6 videos, they go through what hedge fund strategies are. And I kind of explain, like, okay, so merger arbitrage, when 2 companies are combining, there might be an opportunity. This is how it works. This is the return stream and so on. So if you're super interested in this stuff, you can watch 6 to 12 hours of content on my channel that no one else watches. But
I love it. No, I love it. And that actually is a true taste of whether you like trading, because most people love the idea of trading. Again, just to be clear, but actually trading, most people wouldn't find it that interesting, because really good trading is a grind. It's oftentimes boring. It's oftentimes about finding something and then doing it over and over again. Because once you find something, why would you?
It's repetitive. There's another book I would recommend to people. There's this Edward Thorpe, A Man for All Markets. And he's a fascinating guy. He's the guy who kind of cracked blackjack, all those blackjack systems back in the 60s. Then he turned to markets and found all these market efficiencies. So he wrote 2 books. Beat the Dealer was the gambling one. Beat Wall Street, I think, was the stock market one. Then this is sort of his life story. It's a great story, but like, you get the real feeling of what it is to be an investor reading. Another book, and now I'm just talking about books, but there's
no. This is what people need to hear. Yeah, go ahead.
Well, actually, what I would say is if you want to learn how to make money, you can just read an awful lot of books. I work for Ty Lopez. And, but,
some of these jokes are really criminally underrated. Yeah, this is some good jokes. You're dropping some heat right now. This is good.
But there's a great book called Shoe Dog by, I think his name is Phil Knight, the guy who founded Nike. And he describes like it's the best book I've read on like what it's like to run a business. And it's a grind. And he talks about like the toll it took on his family and dealing with bankers and dealing with suppliers who try and rip you off and all of the, like, what everyone wants, all this money that people say is freely available, everyone wants it and they'll fight you to the death for it, and so no one is going to give you these ideas because they want it for themselves. And equally, if there was something easy out there, someone else would grab it. Like why would people make, we'll say, like a copy of a Louis Vuitton handbag and sell it if it's not profitable, right? So not only do you have to sort of have the product, but then someone will copy it and rip it off, and people will, there's hundreds of, like, everyone is out to make the money that's out there because people need it. People need to feed themselves. And it's not easy, and it shouldn't be easy.
Very well said. Let's close this by talking. I like what you said. I like that you're bringing up books, because ultimately that's what I'm constantly preaching on the show. I'm like, you guys are buying $2,000 courses. You haven't even cracked your local library once.
Yeah.
I mean, are you kidding me? You say you want knowledge, but you've never gotten your library card out, or God forbid, spend $10, on a Kindle book or something like that. So that is the way I see to most deep knowledge. Is I really see it in books. Even there are incredible, obviously you're making great videos and stuff like that, but I think the best way to condense information is still in print.
Yeah.
I don't think videos quite crack the educational market, because I think video trends towards entertainment rather than information in a weird way.
Yeah.
Which is just a talk for another time. So I want you to recommend some books for people who actually are in this and they say, okay, I do still want to learn, but I maybe shouldn't follow these gurus. What should I do? What should I read?
I mean, firstly, there's a bunch, like George Soros, one of the greatest traders ever, has written about 10 books. There's guys like Howard Marks wrote a really good book. It's called, you know what I'll do? Rather than me try and list from my faulty memory a bunch of books, I'll send you kind of like a reading list that you can stick on the bottom of your...
that sounds perfect. That sounds absolutely perfect. And people can find you at Patrick Boyle on YouTube. You have 5,000 subscribers, which is just insane to me. These idiots, these scammers have like millions of subscribers.
I'm going to photocopy some big wads of money and carry them around and wave them. And I think that's
It's just so insane. It drives me nuts. But if you actually care about finance, you want to learn, you're a really good resource. Where else do you have some other channels you like to follow that you think are good?
There's a really good, what is the guy called? It's, once again, let me email you, but there's a guy, it's called Donut something. He has this great channel, but I can't remember.
Oh, I think I've seen this guy.
I think he's out of Canada or something like that.
It's like, oh man.
It's like, yeah.
I know what you're talking about. It's like half donut, one donut finance or something.
Something like that. Yeah.
I know this guy. Oh shoot. He was talking.
It's high quality, and it's also, it's little animation. Like, it's watchable and educational.
Absolutely. It's really making me frustrated not being able to find this guy, because I've also seen him, and I also thought at the same time, I was like, oh, this is really good. Just send it to me. We'll get all the links up. Thank you so much for coming on, Patrick. I really appreciate it. And I think
it's a pleasure to speak to you.
Thank you for clearing up the myths in the stock market and in day trading. Appreciate it.
Yeah. See you later.
Thanks.
Bye.